Today's FOMC and Powell commentary went pretty much largely as I outlined yesterday, which was neutrality and not a lot of movement. Dollar and bonds didn't do much today. So the green light holds on the dollar, red light holds on bonds. I've been keeping my eye open to any potential trend change, but it just ain't there. Look at the chart for the 10-year and the greenback, and both seem to be, again, like I said yesterday, pretty cozy. I need to find another word to describe it, but the idea is there's been a lot of volume traded around the levels that we're at right now, and the narrative isn't shifting too much, and the trend for the longer term is still holding. So you've had upside in yields, you've had upside in the dollar, and there's no reason to really expect a lot of difference until something major shifts. And as Powell said today, he's data dependent, and we should believe them because they have been tweaking policy, pausing, waiting, assessing, and trying to avoid the political impact. So we got little headlines in the afternoon around how the president thinks about the Fed. So maybe there's a little tension setting up there. And if the Fed does get forced to go more dovish, then things could get wacky. But for now, it looks pretty straightforward. It looks data dependent, and the data look like they're competing with each other enough to keep policy where it's at as far as the Fed goes. So that brings us to tech. And basically, it looks like this afternoon in Zuck bulls must trust. That's the chart that's been trending higher, and the early response to Tesla and Microsoft is a sell-off, not a giant one, but Microsoft did try and break through initially recent lows, Tesla too. So some of the sideways consolidation style of chart in these two companies is being threatened in the aftermarket. If you look, Microsoft and Tesla both down here, giving back some of the recent strength because stocks have been generally holding on. The Mag 7 trade's been decent. It's a little disappointing for Microsoft to see the trailing numbers not beat by a big double billion dollar exceeding of expectations, but the stock had already been under some pressure, so it doesn't change it too much. The one that really needs to hit here is Meta, and if that is able to reinvigorate the bullish AI momentum, then we've still got pieces in place for stock strength. The technicals did not break down today. Bulls could have easily gotten scared off, and bears could have made a stand with some Fed narrative, but there just wasn't one there. Bonds were calm, dollar was calm. That might change on inflation, but as long as Meta doesn't bomb here, it seems like we should have a decent setup, even with Microsoft and Tesla under some pressure.